Happy Wednesday. Hopefully everyone is enjoying this glorious hump day. My voice is a little bit raspy, not to mention last night was not the best sleep. Had a sinus migraine and ended up waking up a couple times throughout the night. But ironically, the market, well, it's definitely not going through a sinus headache like yesterday, right? The market is pretty much green, despite some Netflix debauchery that pretty much happened last night after the market closed with their earnings. Today, we're going to be talking about Netflix primarily. Yeah, I see AMD up 6% here. It is 10:10 a.m. Eastern Standard Time frame. But we're going to be dedicating today's video primarily to Netflix, talking about pretty much what happened, giving my opinion, my analysis on things. Not to mention, excuse me, I got some post-coffee burpees. I did buy the dip. Yeah, a lot of people are actually very much fleeing away from Netflix, but early this morning, I actually did or rather I should say opened a position into Netflix. I'm going to be covering why I did this, how much I'm going to be looking to buy of Netflix over the next several months. Where do I think Netflix is going? Do I think they're going to recover? Do I think they're going to end up like Blockbuster? And we're also going to talk a little bit overall about the market. That's going to be in this video for today. If you find value in today's video, smash the like button, please. If you've been following me here on this channel and want to follow me longer, well, water cheers. Click the subscribe button. My links, information are down below in the description if you want to see more of me. Otherwise, let's pretty much get started. Gonna try to keep this video below 20 minutes here. Keep some real talk, good vibes going. Okay, so firstly, I want to go ahead and talk about the history of Netflix, my own personal history, because it's actually pretty sentimental. I remember the first time that I got my Netflix subscription back in 2009 when they just launched the Watch Instantly on their website. I'm a very big video gamer. I run other video game channels here on YouTube. And I was actually playing a video game while watching my first Netflix movie. It was Carriers. Really good movie. If you are into apocalyptic survival horror movies, definitely check it out. I believe the movie was made 2009 also. Ironically, it was on Netflix, watched instantly 2009. Hold on one second. Let me go ahead and pull it up here. Carriers. It is not a zombie related movie, but it's pretty much like hey, you know, there's a massive virus going around, extinguishing the population. Yeah, it came out 2009 right here, Carriers. Hopefully you can see that. Oopsies, maybe you can't. My green screen is on. Carriers 2009. That was the first time that I ever watched a movie on Netflix's website, and I thought it was the coolest thing on the planet. I have had my Netflix subscription pretty much since that time period. Very loyal customer. I have a military background. I've been on deployment, or actually only one of my deployments, I actually enjoyed watching Netflix movies overseas. My earlier deployments, 2009, 11, 12-ish, there was really no internet in the Middle East. 2019, for any service member out there, prior service member, especially been deployed during that time frame, you know what I mean. Obviously, internet went to the Middle East, and Netflix was very much available in Afghanistan, in Iraq, many other countries as well. So it is very widely used. I did live in Europe for a couple years as well, too. I had Netflix out there. And I'm just a very loyal overall customer to this company. Never have been a shareholder. So my story for the stock market is pretty much a buying the fear mentality, buying the fear on phenomenal companies, either investing into companies when you see gigantic sell-offs, or if you are trading companies and you just experience a great buy the dip opportunity, you pretty much do that. It's a simple terminology. It's not necessarily really gambling per se. Some people may think it is, but if you want to gamble, I'll show you how to gamble. It's very different of buying the dip mentality. 2020 is when I got into the market. I pretty much bought every single stock that was beaten down during Rona. I think my profile was actually close to about 20 positions. Positions ranging as low as 5,000, as high as 20,000. Pretty much made life-changing money throughout 2020, 21. But when it came down to it, I really didn't know what I was doing fundamentally, believe it or not. Even technical analysis. Really didn't even know anything about technical analysis. I just knew that companies were putting up really good numbers, but they were obliterated because of Rona. And one company that was not obliterated during Rona, surprisingly, was really Netflix. So why is that? Well, it's because everyone was friggin' home. So Netflix has always been one of those unique niche companies out there that pretty much during a recessionary period, they're going to do very well regardless of what numbers they may put up and stuff. Now, you had a lot of stimulus money coming in during Rona as well, too. And obviously, they had some EPS problems definitely throughout Rona. But, I mean, their revenue was gradually increasing. I don't know a single person that did not have a Netflix subscription during being at home at Rona. If people are losing their jobs, they tend to not really go out to movies, movie theaters. Movie theaters, honestly, are going to be obsolete very soon unless they have bars in them. Not to mention if somebody loses their job, they're probably not going to go out to fancy restaurants, but they're going to keep their Netflix subscription. They're going to keep their Amazon Prime subscription. It's one of those very niche markets. So during Rona, I bought into a lot of beaten down stocks, like I said, and here is one of them. So, this is actually one of my smaller positions that I ended up having. I actually made a lot on United. United Airlines was beyond a double up for me. American Airlines, I did fairly well. I ended up buying about just over $9,000 of stock throughout April all the way up until November. And then I cashed out early the following year. I ended up making a little over 5,000, which is about over 50% return. And this was all just basically by the dip. American Airlines, like I said, was a very much lagger. Delta actually did very well. Southwest, United was a big one for me. But what makes American Airlines so unique is that I will never forget this. I was debating whether or not to buy Netflix or buy American Airlines. And the whole reason I bought American Airlines is because they were actually beaten down. So Netflix during April 24th, 2020, they were actually $44. Now they did a split on their stock, so this was theoretically $440. Very much more rich. It's kind of really humorous because during 2000, when I first got into this market, I actually was scared of big numbers. Now I just don't give a freaking hoot about big numbers, aka Meta, aka Adobe. Even AMD could be a big number. What does a big number mean? It's like a large number. A lot of people get discouraged by large numbers, like buying one share at $440. If you have keep the number simple. If you have $4,500, you're going to be getting 10 shares. But a different company that, let's say, has $45 of a share price, you're going to be getting 100 shares. A lot of people, believe it or not, they have, it's a psychological block for new traders, new investors. I got to really be making like a separate video talking about it, but when I first started getting into the market, I had that mentality, and honestly, I wish that I really did not, because I had some really good opportunities that kind of flew over my head. But Netflix was not one of those opportunities. So if I had bought Netflix, I would have sold around the same time period with a 26% gainer. That is actually half of what I made on American Airlines. So I would have only made 25, 26, maybe 2,800 bucks compared to the over 5K that I ended up making from American Airlines. So it really shows how Netflix is a very niche company, but it's very humorous because I've always had Netflix on the radar. Um, to be honest, I'm glad that I never really got into them because I had other opportunities. But during 2022, obviously they took a very big hit along with every other company out there. It doesn't matter what your company did, you were going to be hit, and it took them a very long time to recover. Obviously, they just took off running, especially 2024, and now we're basically at the same level as Liberation Day low, and even from Liberation Day, they utterly just exploded. So a lot of things basically have pretty much happened in Netflix over the last 2-3 years, and there's a lot to really talk about here. Netflix tends to be the setting the precedence of big tech, because Netflix will come out with earnings, and I mean, if Netflix does really good, it sends a good vibe and a good omen for the other market. It's all nonsense, to be perfectly honest. I mean, has there been periods where you have the first couple of big companies fail with earnings and then the last company, aka Nvidia, saves the day? Yeah, that happened a lot throughout 2022 and 23, or actually happened more so 2023-24, not 2022. There were times where Nvidia saved the market. Could like for example, if Netflix came out with something very special last night and went up by 10%, could that make the market feel very good today? Oh yeah, sure. Netflix is trading at a very large market cap compared to what it used to be, but I mean, is it warranted? Well, let's go over their let's go over some small stuff first before we actually dive into their balance sheet here. So, like I said, actually, you want to know what? I'll save this for a couple more minutes. We'll want to go over pretty much some nitty gritty stuff on Netflix here, and then I'll basically go dive into what my game plan with Netflix going forward pretty much is. Where's my screen? Here we go. Okay, so Netflix earnings, obviously, pretty much you see a bunch of just negative articles. Gotta love it. You know, it's so humorous. Don't buy into this nonsense of articles. Like, these articles can change in a mere blink of an eye. It does mess up a lot of people psychologically, especially people that are on the edge, because they buy into all the nonsense that is happening in the market here. But some basic things, just by doing Google searches, is really about June 2025. So this is actually really big, okay? Really, really big. That's going to be talked about probably a lot moving forward with Netflix, and I'm going to be talking about this as well too. So basically, pretty much a $619 million charge lowered the operating margin below their projected 31.5. But here's the thing. So this 619 million one-time charge, right? It's basically pretty much been delayed, and it's going to be happening sometime during this year. However, that is a good thing, because what that means is that more than likely it's already priced into the stock price. And that's really how the stock market pretty much really does things. If you have something negative that emerges, typically it's already priced in. So when it does actually happen, it's going to be like, okay, we already knew about it and it's priced in. it works good in bad ways, especially with something positive. Like if Netflix were to come out and say like, hey, we're going to be doing something positive in the future. The stock goes up by 10% now. Well, later on in the future, when that positive thing happens, the stock price does nothing and people get discouraged and they sell their shares. It's because it was already priced in. So this is something that's really good because now we can basically pretty much say looking forward, hey, this one-time revenue is already priced in, which means, hey, their EPS may actually be hit like in the future. So it's not going to be a shocker. It's not going to be a big whoop, big surprise. It's going to be nothing like of a black swan event, but something to really take in consideration here. Where is this? Here we go. It's smaller screen. Basically pretty much on guidance. Growth rate of 12 to 14% year over year. Due to revenue growth rate, ad revenue, operating margin. I mean, they're just growing. Okay. Like there's nothing necessarily really wrong like with the subscription basis. Like they're growing their company. Okay, it's not like their company is seeing a deceleration of revenue growth. It's not like their margins are falling off a cliff. Obviously we know why their margins dipped down a little bit, but I mean it's nothing like drastically insane. Obviously, we do got to talk about their potential acquisition here as well. But before we basically pretty much go over that, I pulled this from their website. I could not find a PDF version of this. I honestly am not sure if it hasn't been released yet or something. Maybe it has to be finalized. But just by looking at their income statement here, I'm going to go ahead and keep my head off the screen here. Basically see year over year, 12-month ended. Look at their revenue, cost of revenue pretty much increased. Sales and marketing, obviously that's like a no-brainer. They're obviously spending more to increase their revenue. Technology and development, that's a no-brainer. That's going to go up. To do another thing too that I'm looking at. Operating income that was to be expected to go up. Income before taxes that obviously went up. Provision for income, net income that obviously went up significantly. And then we basically take a look at their EPS, and this is pretty much what I was talking about right here. Obviously, back in June, their EPS started to really kind of guide much lower than 74 cents here. Obviously, it's not back to where it was back in Q1 of 2025 and also Q2. But I mean, is it going to eventually get back to there? Yeah, absolutely. The company is growing. There was nothing really in the conference call yesterday where you basically pretty much had saying like, hey, our company is not growing, okay? Now moving on to the second topic here, talking about the acquisition. So, Warner Brothers Studio, HBO, it's a humongous acquisition. Humongous acquisition. When I say humongous, I mean like it's the type of money that I myself am probably not going to achieve in this dimension. maybe the next like 20 lives, maybe. Actually, probably a lot more. Hold on 1 second. Got to pull this up. So basically, pretty much, it is a gigantic acquisition that I don't know why I keep pulling up the big screen here. Hold on, little screen. Here we go. It is a gigantic acquisition to basically purchase them. Okay, 82.7 billion total value of them, like going to purchase, like make an acquisition. And this is freaking out so many people. Well, what can be a positive thing about purchasing, including HBO Max. Um, would hold on one second. I gotta pull this up. Let me see. I believe they're looking at double their income. Here we go. So, how much, based upon the reports, proposed acquisition of Warner Brothers Discovery, 80 is expected to add over $30 billion in revenue to Netflix top line. That is insane. That is basically pretty much like a double up of their revenue. Obviously, if they were to finance it and take out a lot of debt, obviously there's going to be a lot of interest being paid, which is freaking out a lot of people, freaking out a lot of shareholders. So what is my personal opinion on this? Well, it comes down to one thing. Do you believe the management team, and do you believe their forecasts? It comes down to a yes or no answer. Because obviously, when people hear of publicly traded companies buying and making accusation, a purchase, AMD ironically purchased two companies over the last couple years, and AMD is going to be seeing their entire business over the next couple years now. We can talk about SoFi buying Galileo. That was a lot of money. What about Meta buying Instagram? How much did Meta pay for Instagram? Hold on one second. How much did Meta buy Instagram for? A lot of people were pissed at Mark Zuckerberg. A lot of people. Oh yeah, a lot of people were pissed at Mark Zuckerberg for this. They bought Instagram for $1 billion. Oh, that was such a smart move. That was a brilliant move. How much did Meta buy, what else? WhatsApp for? Here's another one. This was even greater here. 19 billion. A lot of people were pissed about that. Is WhatsApp WhatsApp is amazing. I use WhatsApp. How much did PayPal buy Venmo for? Here's another one. PayPal bought Venmo. This is a great acquisition. Great acquisition. So what it comes down to, 800 mil for a purchase of Venmo. Do you know how much money PayPal makes from Venmo? Like it's unbelievable. So the whole point, and obviously I'm way over 20 minutes on this video here, is that a lot of people get the hibbity-jibbities when an acquisition happens with publicly traded companies, because they tend to not like change. I actually do love change, because change can be good for the better. And if you are an innovator, you're constantly going to be changing what you do and growing. Just like how you grow through life. Maybe you change the type of clothes you wear. Maybe you change your body appearance. Maybe you go from fat to skinny athletic. You know, like, change can be really good. A lot of people cannot stand change. I understand it. That's what it is. But when it comes to the market does not like change. The market just likes a steady increasing business. There's a lot of people that look at Netflix and they're like, what are you doing? Why are you doing this? Well, obviously they're doing it for a friggin' reason. Why did Mark Zuckerberg buy Instagram? To make a lot of money. Why did he buy WhatsApp? To make a lot of money. Why did PayPal buy Venmo? Why did SoFi buy Galileo? To make a lot of money. Do you believe the management team? I do, and here's why. Because if we go into a recession, people are going to be watching HBO. People are going to be watching Netflix. People are going to be watching stuff on their television, their tablet, their smartphone. You can get an HBO app on your iPhone, your tablet, your PC, your Mac. People are going to be watching all of that stuff. So, what is my game plan moving forward with Netflix? I'm going to be continuing to add shares here. And the lower it goes, and I do believe it's probably going to go lower here, unfortunately, if you are a Netflix shareholder. I hate to burst your bubble, but we are in a complete sell-off territory here. This can definitely push lower to probably maybe 75, maybe even 60, high 60 range. We can very well see this stock continuing to trend lower here, probably all the way up into next earnings. And maybe we bottom sometime in April at next earnings and basically form a pretty much, we're either going to do a cup and handle pretty much chart pattern, or we're just going to be doing a very wide V-shaped recovery. Obviously the V-shaped recovery may be to the end of 2026 here, but it's going to be a very long process. Not to mention if they do go ahead and acquire Warner Brothers, that can take some time to really show for profitability and lag as well too. But it comes down to trusting the management team for any type of acquisition. For my SoFi bulls out there, were you not a little nervous with Galileo being purchased? Of course you were. AMD acquired two companies, like I said, to basically fund their research and development and growth of their chips, were AMD. But here's the difference. Obviously, Galileo is not 80-something bill. Obviously, AMD did not drop 80-something bill as well, too. A lot of people are getting freaked out because of the dollar amount. And I understand it. I get it. It's a crazy number. Not to mention 82 billion is I believe that's like 20-something% of their entire company's net, like their market cap. So it's a lot of money. Like when it comes, when you just round it up, let's say Netflix is 400 bill, let's say the acquisition is 80 bill, so you're talking about 20% of their market cap is being a merger and acquisition here. That's a lot. It's not like it's 10%, it's not like it's 5%. If it was 5%, shareholders would be like, this is actually pretty, this is a steal of a deal here. If it was 10%, you'd probably have some bears come along, but the bulls would probably still be chugging along. A lot of bulls right now are just scared shitless. But you got to remember that there are people that have been in Netflix probably years and years and years upon years. So my game plan moving forward is basically pretty much that I'm going to be buying over the next X amount of months. The stock price obviously dips lower. I'm going to be more of a aggressive buyer, especially on this account, and it's my first time as a shareholder, so I'm pretty happy. Could I be dead wrong here? Oh yeah, absolutely. I could be totally wrong here. Netflix could very well turn into dead money. The company could continue to grow, but their stock price continues to go down. Maybe Wall Street just lowers their multiple and really looks at Netflix as a time period of like, hey, you need to get back down to like maybe even maybe even just go back down, like wiping out like a forward PE as far back as like 2024 timeframe. Can that happen? Anything is possible. But I really find I find it hard to believe, because if we do move into a recession, like, people are not going to be canceling their Netflix subscriptions. People are going to, if anything, more people are going to go to Netflix subscriptions. People are going to be doing less of outside activities, and they're going to be spending time at home watching movies and TV shows, because it's cheaper for paying $20 a month than to go to a movie theater or to go out to eat and stuff like that. So as the stock price pretty much declines here, the last thing I'm going to say is that they did do a split here as well too. So it's pretty ironic, because a lot of times when a company does a stock split, I mean, doing a forward split is not anything bad. It's actually bullish. Tesla has done a couple forward splits over the years, But it's pretty funny. If you look back, whenever a stock does a split, their stock price just tends to, obviously 2022 is a bad example for Tesla here, but if you just look at the charts, even Nvidia, I remember this time period. Nvidia came out with record breaking earnings. They ended up doing a dividend, doing a stock split. The stock ended up rallying, and then it crashed, and then ultimately it just collapsed. So there's a lot of stuff that is at play here. Also a lot of dark forces of evil. But I mean, overall, yeah, you know, we have a new position on this channel stock profile here. If you're new here, welcome. This account here on this channel, we're doing an account challenge, taking this amount to 6 figs in the course of 18 months. Although I'm going to be transferring over $2,500, honestly, probably either today or tomorrow, because I feel that I'm going to probably have to go shopping, especially with a lot of these earnings that are going to come out here. Because if the market sentiment is bad, although we're kind of really seeing a good reversal today, but if the market is going to throw a hissy fit still for whatever reason, I'm definitely going to be going shopping. Obviously, Netflix is going to be a new shopping position here. Where's my Netflix position? Hold on one second. I gotta go ahead and my positions actually changed here. It's not a bad thing. There we go. Obviously, and this is actually pretty hilarious. My private profile, my largest position is SoFi. Second is AMD, and I've said on this profile I would like AMD to be larger than my SoFi position. If AMD is about to take over SoFi here, it's pretty remarkable. And I was talking about this yesterday, and I've been talking about this the last couple months. AMD is gonna flip. AMD, my cost basis on AMD is greater than my cost basis on SoFi here. AMD is going to flip, and AMD is going to be rocketing up here. So Netflix, obviously, I'm already up by 2%. Woo! I'm going to be buying more Netflix here. Adobe continues to fall off a cliff, which is just so unreasonable. Probably going to be adding to Hood as well too. But then again, I mean, hey, if Hood blows earnings away and they continue a very large rally, probably not going to be picking up any more shares. Adobe's earnings are already here. They're going through a weird time. Adobe definitely going to add. PayPal might be adding a little bit, but holding off. Same thing with Honest Company. Meta, depending what happening to them, I may add a share. AMD, I'm good. SoFi, we're good. Although after earnings, after the Fed week next week, I might be doing some long-term options here. But otherwise, Netflix, I definitely am going to be a buyer here. So please let me know down below in some comments if you are a Netflix holder, if you think it's a good stock or too risky. I guess time will tell here. Also, if you want to join my private group, that link is down below in the description as well too. Hopefully everyone is doing great on this day. Tomorrow we got another great day to talk about stock. Wow, man, it's AMD is up by 8% right now. What is going on with you, baby? Okay, take it easy, everyone, and I'll see you on the next one. Later.